This is BizBeat. I'm Junfeng. Wall Street has witnessed heavy selling in the past few weeks. The Nasdaq has fallen by some 30% from the beginning of the year. We're hearing news that rich people such as Elon Musk is losing billions of dollars of personal fortune on a daily basis. Behind such sensational headlines is a bloodbath of thousands of companies losing 30, 40 or even 50% of their market value since the start of the year, including some Chinese listings. Stock investors around the world are losing money. Venture capitalists and private equity firms are tightening their belts, reluctant to invest in cash-thirsty startups. Stock sellers have a good reason to be jittery. The US Fed is raising interest rates and shrinking its balance sheet, sucking liquidity from risky assets. Fears are rising for a super bubble burst as valuations are high after years of rally under ultra-loose monetary policy. The Fed also has a good reason for its tightening. The US is experiencing its worst inflation since the 80s. March end inflation was at 8.5% and April at 8.3%. In theory, raising interest rate will cool economic activity and curb demand and may bring down inflation. Now here's the catch. Will higher interest rates necessarily bring down inflation without crashing the economy? Many economists predict a bad scenario, stagflation, where inflation stays stubbornly high while the economy falls into recession. But in fact, the US doesn't have to face such a risk. Beyond raising rates, there are at least two moves it can make to reduce inflation. One is to remove all the tariffs on goods imported from China. US think tank Peterson Institute of International Economics estimates that such a move can reduce America's inflation by 1.3 percentage points. I'm glad that the Biden administration is already talking about this move. The second move is to push for a ceasefire negotiation between Russia and Ukraine. Some geopolitical experts say the US is the only winner of the conflict, as a prolonged war hurts both Russia and Europe and helps US selling weapons and attract money flow from Europe. But these experts forget to calculate the extra inflation pressure on America due to high energy and food prices. In April, food and energy prices hikes contribute to 2.1 percentage points to America's inflation. Now the math is here. Removing tariffs on Chinese goods and ending the Ukraine conflict will cut US inflation by 3.4 percentage points. That means April's 8.3% inflation can be lowered to 4.9%, a huge improvement. The question is, will the Biden administration do the right things for its economy and markets or continue to play the tough political cards to gain popular support? The next 6 months until the end of this year will show us the answer.